Welcome, guys. Welcome to another episode of the crypto news with the Cryptoverse DAO. If you're catching this on the YouTube, do remember to like, comment, and subscribe. If you'd like to be a part of these live, because we do them on the Discord, do join the Discord. There's a link tree in the description below. We give you free education, trading strategies, just empowering you to make better moves in the Web3 space as it grows. We're in a bear market. And the bear market is when you learn, make moves, work on projects, and as we usually do, we're going to give you a spread of what's been going on. Let's launch right into it. Let's talk about European regulation. Experts weigh in on European Union's MiCA crypto regulation. So the CEO of Modulus, Richard Gardner, has expressed his opinion that the new regulation in the EU may signal the end of the current digital asset downturn. That's pretty interesting. Let's talk about why. So EU officials recently agreed on a landmark law called MiCA, or Markets in Crypto Assets. It's a framework that provides guidance for crypto asset service providers, or CASPs, CASPs, to operate within the Europe region. Following this, experts reacted with varying opinions, from supporting the decision to explaining how it would have adverse effects. According to Gardner, like I said, CEO of Modulus, the new development provides a clearer picture for crypto asset service providers as to what is expected by the authorities, which is good. Not everything contained in it is going to appeal to all the players, sure, but at this point, the industry just needs to understand what's expected of it. I do agree. It is well past time for a guidebook so that operators can act with intention. We've talked about the regulation versus freedom debate for a long time. I feel that measured regulation is quite a good thing. It's just a required thing in the space at this point. We see a lot of positive sentiment being kind of stopped in its tracks. Potential investors, non-institutional investors, just private investors, might be turned away from the lack of security and the lack of just not credibility, but really security. When making an investment, you want to know that if you are defrauded, there is a regulatory body with enough oversight and power to make sure that you are either recompensated or that the fraudsters are brought to justice, to serve justice in some way. We just don't have that in the space right now. And it's a good thing. It's a good thing that regulation comes. It's just it's a bit of a problem when regulation oversteps the bounds of requirement. That's when it becomes a problem. But we'll just have to wait and see. I mean, governments don't have a brilliant track record, but we'll have to wait and see. It's a technology that's in its infancy, needs a lot of regulation for sure. Now, Gardner added that this may end the downturn that we're currently seeing in the digital asset space. I mean, we are in a bear market. Like I said, everything is declining. The price of Bitcoin, as of the recording of this video, I think it's under 20,000. But I mean, down the line, you're probably gonna see it go lower. We've made predictions within the Cryptoverse DAO. I mean, don't hold us to it, but we'll see. We'll see. If we're right, hold us to it. If not, forget about it. Commenting on the idea of digital asset market downturns being kind of mitigated or stopped, in its tracks, the downturn as a result of regulation, on the topic of regulation being a way for the industry to expand, basically. Peter Kozhikov, the CEO of payment infrastructure firm Mercurio, also praised this move in favor of regulation in the EU. He believes that it's a welcome step in the right direction. There's a real desire, he says, for a clear set of rules to protect individuals and businesses who have adopted cryptocurrencies already, to weed out bad actors and to encourage others to adopt crypto as a result. Kozhikov added that the new development may, quote-unquote, unleash the potential of the sector and push it towards mainstream adoption. And that's what we love to see at the end of the day. Adoption through education, that's what we're trying to push. We'll revisit this story as it develops. Obviously, crypto regulation, that's gonna see a lot of long-lasting effects for time to come. So we will continue to watch this story. We will watch the career of this story with great interest, like Palpatine. Now, not everyone believes that the new development in EU regulation will bring positive effects within the region. Seth Hartline, the global head of policy at wallet firm Ledger, noted that the EU missed an opportunity to regain the market share that it lost in Web 2 through developments in Web 3. Hartline also highlighted that the rules would be in violation of the fundamental rights of Europeans. Now that right there is the major crux of the argument: rights, freedoms versus security. Freedom versus security. End of the day, I mean, it really depends where you land on that, on which side of the fence you land, when it comes to that argument. But it is important to acknowledge that when you're in a space with absolutely no regulation, any regulation is somewhat good, and it doesn't seem like this is really overstepping. Let's take a look at the details. I'll put this in the not in the stream resources down below, but in the general chat in the Discord, just as an additional incentive for you guys to join, because there's so much great stuff on there. A lot of resources, a lot of knowledge, a lot of educated opinions as well. So come through and be a part of it, man. But yeah, I'll leave this in the general chat. Let's move on to multisigs. We talked about Harmony, the hack with Harmony in one of the previous news episodes. So multisigs, it's basically a means of protecting funds in smart contracts. It's a verification method. And there's been a lot of negative sentiment about it. Multisigs mean funds and bridges are quote unquote one small slip up from being hacked. You see this with Harmony. People literally called it out. They were like, the verification system, it's not as watertight as it should be. And lo and behold, what happened? Harmony was hacked, right? Industry insiders have pointed out the flaws inherent in multi-sig security as a way to protect funds in smart contracts and have offered various alternate solutions. We'll explore that. So the recent exploit on Harmony's Horizon Bridge revealed the inherent flaws with multi-signature admin keys. Two crypto project leaders expressed their concerns that the expansion of the multi-chain system could be hampered by the use of multi-signature contracts due to the dangers they pose with bridges keeping crypto funds safe. A bridge is basically, multi-chain. It's when you centralize sort of access to multiple blockchains within one, you need to utilize what's called a bridge. And a bridge is very susceptible to hacking. You saw this with Ronin. You saw this with just throughout. If you go through all of the news episodes, you'll see pretty much every hack targeted a bridge. Multisig refers to the requirement of multiple individuals to approve a single transaction. A multi-chain ecosystem is the conglomeration of hundreds of blockchains with varying consensus algorithms that often interact through token bridges. We've covered consensus mechanisms and algorithms in previous educational episodes, so do go take a look at that to kind of absorb this information a little bit better with some more context. Founders of Moonbeam, the founder of the Moonbeam blockchain, Derek Yu, spoke to Cointelegraph, said that he advocates for new approaches to security that aim to take the element of human error out of the equation completely. I like that. Yu said that the multi-chain ecosystem is seeing an increased rise in usage due to the quote-unquote desire to move assets to different chains, but that it needs much better security measures. There are inherent weaknesses in the multi-sig approach that expose you to hacking risk. It takes one small slip-up and you're in deep trouble. Moving assets between chains usually requires token bridges, right? Like the Horizon Bridge, which was exploited very recently for about $100 million in crypto assets. Horizon was compromised when two of the signee keys for its multi-sig contract were discovered by an attacker. Yu pointed out that the multi-sig approach may be the standard for the industry at the present moment, but it's far from the gold standard. In his estimation, there's much more secure designs that could be implemented. You could use a separate proof-of-stake network for transfers as an example. That's one of his suggestions. He feels that while developers have to make compromises to get to chains with lots of activity, communication between chains at the blockchain level is the bleeding edge and is the most secure type of bridging. The CEO of the Mina Foundation, Evan Shapiro, they're the ones that developed the Mina blockchain. They share distrust of the multi-sig approach. He believes that there are better alternatives available now, and so use them. He feels that the biggest problem facing the multi-chain ecosystem is its over-reliance on trust, which is, the opposite of what decentralized finance really stands for. The obvious problem is based on third-party custodians serving as trusted intermediaries for bridges. In his view, the ideal would be for blockchains to be verified by each other. But he acknowledges that it is infeasible and inefficient. For now, an alternative is to utilize zero-knowledge proofs that compress and verify the massive amounts of data stored on blockchains. Shapiro distilled the dilemma presented by token bridges down to who or what entity users are placing their trust in when bridging tokens. He says it doesn't matter if the bridge is the first party, as is the case with the Horizon Bridge, or the third party. It's not about the development of the code. It speaks to the risks of custodial bridges in general. If you have a custodial bridge, a fixed number of people can compromise it, which is reliant on trust, which is, again, antithetical to what DeFi is. So, we've talked about multi-sig. If there are any questions, remember, you can leave a comment down below and we can cover it next time, or, we roll into a live discussion after these news breakdowns on the Discord, so do join the Discord if you'd like to be a part of those. Let's talk about integrating blockchain-based digital IDs into daily life. Blockchain tech is pushing the boundaries of ID management. Governments are looking for scalable solutions that promote privacy, control, and decentralized data management at the same time. We've seen use cases across the board. That's true. Finance, data, logistics, security. It's an amazing technology that can be kind of applied. It's applicable across the board very universally. But the idea of using blockchain's immutability, translating that to ID humans, has kind of received a new breath of life because of CZ. Binance CZ visited the island of Palau to kick off its digital residency program. The blockchain identity management market's estimated to grow by the billions in the span of 5 years, from last year to 2025. Key factors include the rising demand for digitalization and privacy-respecting identity solutions, very important. As a result, a myriad of solutions breached the market, serving this need in the form of NFTs, DLT, right, and bare-bone blockchain technology. Considering the plethora of use cases the blockchain can serve on a day-to-day basis, loads of government organizations have begun experimenting with the technology. CBDCs is what you saw a lot of governments kind of throw their weight behind, right? We've covered quite a number of them. Now let's talk about the problem with traditional IDs. It's always been paramount to governments to ensure targeted delivery of services, allowances, whatever they want to call it, dude. But ongoing advancements in technology empowered the general public with tools to create IDs visually identical to the original. Now, blockchain solves that problem with immutability, right? So you had a government trying to register, have a registration of the people, but then the people can kind of juke the system because fake IDs, McLovin, you can just do it nowadays. Well, not just nowadays, for like a long time, but now it's just supremely accessible. So how do you get around that problem if you're a government? Traditional paper-based IDs, there's a difficulty of confirming legitimacy. Makes sense. It's not really transferable across different systems or mediums. And history has shown how people successfully use fake ID to claim unauthorized access to so many things. But then, blockchain comes in and solves that problem. Efforts on this front saw the rise of a new ecosystem comprising various blockchain-based digital ID offerings. An Indian administrative service officer, Shubham Gupta, recently spearheaded the launch of a Polygon-based system for, I remember this, we covered this on, was it an open discussion? I think it was an open discussion, the verifiable caste certificates on behalf of the government of India, Maharashtra, right? Speaking to Cointelegraph, he said, if identity management systems have to be rated on a scale of 0 to 1 based on decentralization and individual control, traditional centralized ID systems will be on the far left, and fully self-hosted public blockchain-based IDs would be on the extreme right. Forms of blockchain digital IDs. Let's take a look at this. So if we do decide to use the immutability of a blockchain, translate identification verification to a blockchain, what would it look like, right? The idea of blockchain-based digital ID has been floating around for a long time. Recently came into the limelight. This is Bundles Bets CEO Brenda Gentry, speaking to Cointelegraph. Hey, look, it's an Italian ID document. That's funny. While NFTs were first marketed as a tool to represent real-world objects, including intellectual and physical assets, the technology found itself well-suited to a variety of applications. We've seen ownership NFTs, land deed NFTs, citizenship NFTs. People are working on passport NFTs. There's just so much in the world right now. Wide-scale implementation of blockchain-based digital IDs, like the issuance of national identity cards, passports, driver's licenses. It takes time, but Gentry strongly believes that this is the destination that the world should move towards. Why? Because in addition to helping authenticate people, the immutability of blockchain discourages counterfeiting, discourages tampering, identity theft, fraud, all kinds of stuff. Citing the involvement of luxury brands and artists in the NFT kind of in the space of using NFTs to authenticate the ownership over something, Gentry says luxury items can be checked for authenticity on chain, which completely eliminates the chance of owning a counterfeit product. So why not, check identity for authenticity on chain, which eliminates the chance of identity theft or identity duplication or just any of the kind of issues that can arise on a. I don't know if I should share this. I had a story of a friend who, for some reason, it seemed as though like he had a phone call and the information he got was that he had two registered like social security, the equivalent of a social security number in the country that he was living in at the time, which is fucking wild. And I don't know where, like, just think about it. It's not really immutable. A blockchain cuts through all of that stuff. Now, Neil Martis, the co-founder and project lead of LegitDoc, which is a solutions provider for blockchain-based certificates and ID solutions to state governments of India, envisions a greater adoption of public blockchain-based ledgers over the next decade. Web3 native decentralized IDs are going to play an incremental role in identifying users and authenticating them to participate, in different types of Web3 native transactions. Yeah, I mean, immutability. I've said the word about 700 times during this article already. I mean, the technology boasts multiple advantages, that's true, over traditional software, traditional mediums. The opinions regarding the benefits of blockchain boil down to the control over personal information. Self-sovereignty, right? The biggest benefit of blockchain-based digital IDs, according to Martis. This means that blockchain empowers users to share partial or selective information with their service providers instead of handing over the entire piece of paper that says, this is me, look at me. With blockchain-based IDs eradicating the misuse of information, experts envision the birth of a truly trustless system. That's what we want to move towards. No involvement by third parties. Gentry reiterated verifiability, traceability, and uniqueness as some of the blockchain-specific benefits. Distributed ledger, it's on a blockchain, so you can't duplicate it. Of course. All the digital ID can be verified on the blockchain, can be traced back to the owner's account, which can also be used for KYC. Amazing. So that's, if you put together you pick and choose what information you give to people, and use that for KYC, that's pretty good. But what are the limitations? I would say mass adoption hasn't happened yet. Is that what the article is saying? Mainstream acceptance of blockchain-based digital IDs will have to mean overcoming the pressing challenges that hinder its adoption. Yeah, some of the roadblocks, lack of education, that's why we're here, Cryptoverse DAO, among the masses, and supportive regulatory environment, but we're seeing that happen, right? On the education front, Gentry has noticed a fast-changing scenario brought on by mainstream discussions and widespread adoption. But greater intervention is needed from industry players, right? Martis concurred with Gentry. These guys are agreeing the regulation is needed. Blockchain IDs, no matter how decentralized, will need attestation or recognition by issuing authorities, right? If the government doesn't recognize the validity of the blockchain ID, then, everything has to work hand in hand type thing. Biggest limitation, you can't, if a government doesn't recognize its validity, you cannot say the same for availing a majority of public services, right? You cannot use the technology if the government doesn't allow you to use the technology, basically, which is the biggest limitation. So how do you get around that? Adoption through education, literally our mission statement. Um, Given that a majority of real-world identity systems are under the purview of governments, permission, the distributed ledger. Yeah, so choosing the perfect blockchain will require weighting the unique advantages and limitations of each. Ethereum's gas fees or Solana's infamous outages. The blockchain advisor suggested that Binance might be the choice because of its high transactions per second, low latency, and fees. Personal experience, Gupta shares that the Indian state governments tend to choose a middle ground, wherein instead of a single authority fully in control of citizens' identities, a group of independent departments will share a common distributed ledger that hosts citizens' identities, anchored periodically on a public blockchain. Interesting. That's the sauce on blockchain IDs. The next thing I want to talk about is the bull run. What is going to drive it? What is going to be the impetus for the switch from the bear market that we're in to the kind of bull run that we all want to see? With all the recent turbulence in the crypto space, the question of the moment is what will drive the next bull run? Governments, enterprise, gaming? What's it going to be? Ariel Shapira covers emerging technologies within the crypto, DeFi, and blockchain space. And okay, let's take a look at this opinion piece. So, the crypto market runs in cycles. Every market runs in cycles. Boom, bust, right? And rinse and repeat. Even though digital assets are known, if not infamous, for being more volatile than any other asset types, their price action still follows a similar up-down pattern. BTC's 4-year cycle largely comes down to the algorithm's intrinsic rules. More specifically, the halving of miners' rewards. Every 4 years, there's a Bitcoin halving. Off-chain factors such as the US tax reporting rules can also come into play. But while the market's logic dictates change, the logic itself remains largely unchanging. Basically, the same way a bull run eventually runs out of steam and hits a plateau, bears eventually lose grasp of the market as well, and another upshoot comes. Boom, bust cycle. Right now, the market's still recovering from just a fucking whole lot of shit, bro. And the Terra crash was one of that, one of these kind of negative events, and many other pressures. Right? There's been no shortage of pressure in the last couple of years. As fragile as rebound attempts may be, and as red as every coin is compared to just a few months ago, the global crypto scene is hunkering down and powering on in wait for another bull run. So where's it gonna come from? Right? National governments. Just a few years ago, the very idea that Bitcoin could be legal tender was fucking laughable. But now, El Salvador, we're looking at El Salvador purchasing 80 additional Bitcoin at 19,000. They're buying the dip, literally. So, like, we're seeing it. Central African Republic as well. You know, we've taken a look at the Faustin, I don't know how to pronounce his name, but the president tweeting about this stuff. Bitcoin gets legal tender status. Our very own Simon was in Jamaica when... the CBDC was launched out there. We're seeing CBDCs across the board. UK government's very bullish on the whole crypto space as well, to a degree. I mean, we'll have to wait and see. Interesting comparison between CAR and El Salvador, though. So it's by now common knowledge in the crypto space that remittances from abroad make up a major portion of El Salvador's budget, right? And this was seen as the economic rationale behind the experiment. Reports suggest the process is shaky. I remember there were some ATM issues, but the nation's government does shop for Bitcoin, right? They're buying the dip. I mean, fucking look at this. It's literally in, look at that, on-chain. 80 Bitcoin, 19,000. Thank you for selling cheap. Literally, man. So, yeah, buying the dip. With the CAR, things have been a little different. The economy of war-ravaged CAR has been ailing for a long time now, and only about 10% of the country's population has internet access, according to World Bank data. So the use of crypto will likely be restricted to a small portion of the population, and given the geopolitical and local context of the move, the prospects can indeed be quite murky. Still, more emerging economies may choose to follow suit, especially given that El Salvador is not the only nation leaning a lot on remittance transfers for budget cash, right? Even the fact that there is precedent for that is big enough to get the momentum going. And should even one more nation join the club this year, the crypto markets will know it. Sri Lanka, who knows, maybe. Blockchain for institutions. While the early crypto rallies primarily came from private retail investors and traders, institutional investors have been joining the fray as well in recent years. From top banks and hedge funds delving into the crypto space to fintech giants adding support for digital assets on their platforms, institutional adoption is no longer a pipe dream, it's reality. Even the inside baseball use cases, such as JP Morgan experimenting with its private blockchain, meant for interbank use, or a group of top information and communication technology providers tapping ClearX's blockchain solution for data on demand services. These all matter. They all add extra credibility to the technology powering the crypto ecosystem, which adds to long-term investor confidence, which is something we talked about at the beginning of this episode. Even though quite a few enterprise-grade blockchain projects will likely stay on private blockchains, the growing investor confidence in the technology is likely to further normalize crypto in the public eye and draw more eyes to the blockchain space, the public blockchain space. Furthermore, such projects make for a whole niche of market solutions that will help companies build their private chains. Another niche may be in bridging these private chains with the public space. Crypto is, after all, about connectivity and inclusion, so such aspirations do make sense. Asset managers, that's something else we should talk about. The first Bitcoin ETF in the US took off in 2021, and the amount of interest it drew from investors is just more testimony to how much of an appetite the market actually has for crypto exposure. We've reached a point where some financial advisors are recommending that everyone should have at least some exposure to crypto, which, yeah, thanks to a change in sentiment like that, moving away from, yo, it's a scam, it's drug money, it's this, it's that, it's a bubble, it's gonna pop, it's bad for the environment, it's fucking, this, that, and the other. More and more asset managers now will be looking into the crypto space, right? Whether the client requests it or whether it's their own inclination and they suggest it to a client, it's going to happen. And by the same token, more and more high earners will be joining the ranks of crypto investors. That's something we saw as well in a news episode. I think it was like 70% of high earners are invested in Bitcoin already. Don't quote me on that. Go back and find the video and quote Dharma from the past. With all due respect to ETFs and other traditional assets, any crypto savvy user will tell you actual crypto is better than a traditional asset pretending to be crypto. The reason for that is that crypto is far more dynamic. Your Ethereum pegged ETFs will only sit with your broker. With the actual coins, on the other hand, you can stake, you can use yield farms, you can tap various other DeFi services for more passive income. In this respect, it'll be interesting to watch and see if traditional asset managers soon start losing ground to things like Equify, backed by Equibank. One of the platform's key services is a yield aggregator, right? It's an asset manager that allocates funds into various DeFi protocols to guarantee maximum returns. Crypto is just more lucrative as an asset class that can work for its owner passively 24/7 through platforms that are always accessible and take just a few clicks to manage. What's holding private investors back from this? It's not the brokers. Like with private investors, you just need the education. You just need to know that this is an option and then Google how to do it and then do it. Games and gamers, that's something too. Blockchain games, GameFi, it's not something new. Axie Infinity. CryptoKitties, literally, people in the Philippines turned to Axie Infinity to search for an income in the pandemic, right? Play to earn, move to earn, game to earn. It's not difficult to wonder if some of this pride may have been misplaced, given the plights that Axie Infinity, the industry's standard bearer, is now facing. We've seen the hacks. We've talked about it. The game has long had an inflation problem as its underlying business model began to give way. Adding to this issue was the recent hack, one of the worst recorded in DeFi history, right? Here's a model for blockchain gaming economics. I'll put this in the general chat as well for people to kind of take a look at. Axie's pains could be another case of just a nascent industry figuring out its own best practices. We are in the infancy of this industry after all. A whole host of new projects is gearing up to move in this space and move the space further, bringing it to like AAA level polish in terms of visuals and gameplay. Once these new juggernauts enter the arena, we will see more gamers begin to explore crypto. I think Watcher Guru reported that GTA 6. I mean, every rumor about GTA 6 is probably false. We've been having GTA 6 is coming out next year and it's set in Miami since like 2017. But apparently GTA 6 is gonna have crypto based rewards, crypto based currency system in game that's based on crypto on a blockchain. So the video game industry, undisputed powerhouse, yeah, in the entertainment world, and wherever it goes, its adherents will follow, right? Which means it's not really fair to write blockchain gaming off as just a subset of the retail market. Even mobile gaming, people laughed at it. Right now, I mean, everyone and their mother plays like what do people play? Clash of Clans. I don't know what people play on their phones, but people do play games on their phone. Is the point? It has seen adoption, right? From esports to in-game ads, the traditional gaming industry has already given birth to a wide array of satellite markets. Think about microtransactions in games. And all of those make for new use cases, new audiences, and new business opportunities. It's not even just microtransactions, man. Think about like streaming, video game streaming. People have made careers off of watching games, talking about games, It's just things that pop up around the industry. What do you think? Do you think it's going to be governments? Do you think it's going to be institutional investors, private investors, or games? What do you think is going to drive the next bull run? Let us know in the comments below before you drop a like, and remember to subscribe and hit that bell for notifications on this video. Do join the Discord as well. It is, it's been about 30 minutes, so I'm going to wrap up now. Thank you so much for being a part of it. This is a Friday episode, so go enjoy your weekend, man. I hope you have a fantastic Friday. This has been your host, Dharma Sutra. We've been the Cryptoverse DAO. Thank you so much for your time. Bye-bye.